Hi, welcome to Economy and Markets TV. This is the show that takes you around the world of economic and financial news. I'm your host, Dave Okenquist, Senior Research Analyst here at Dent. It's time for the weekly recap show, which means I bring on Boom and Bust editor Rodney Johnson. Rodney, good morning.
Morning, Dave.
Great to see you today. We had some technical difficulties last week. It looks like this thing is holding up good. So everyone's getting the best show possible today. Yep. Rodney and I, we review the top news items of the week. We try to keep things moving and each topic to about 2 minutes or less, which I enforce with that bell. Don't have a lot of news this week, but there are some important things that are critical to the markets and economic growth as a whole. First thing, starting off with probably the most important one, was the minutes of last month's Fed meeting came out saying pretty much the economy is doing well and we're going to keep going with these rate hikes. However, the White House is not necessarily thrilled about these plans, Rodney. There's some suggestions that this is maybe a step too far about political interference, but you had some historical examples that you mentioned in the copy today. Maybe tell everybody about those.
Yeah, there's actually two or three things going on. First of all, the Federal Reserve governors did say, hey, guess what? We're doing pretty well. We can hike again. We think that's the right thing to do. They took out some language that was accommodative, and so that's kind of moving more towards a normal tone, which is what people look at. Mm-hmm. They did note some difficulties ahead, perhaps with trade barriers and things like that. But the thing that you mentioned, of course, is President Trump weighed in and said, gee, rates should be lower. I think this is bad. And everybody says, oh, president shouldn't talk about this thing. That's out of decorum. That's wrong. Political pressure. Right. And they act like this is new. Well, it's been around a long time. As a matter of fact, you go back to the 30s, 40s, and early 50s, and the Fed actually held rates at a very low rate on both the short term and the long term for 17 years just to help the government. And that blew apart after Truman had fired two different Fed presidents to get to one that he really liked, William McChesney Martin. And then he, in turn, said, hey, we're not going to do this anymore. And it got so bad that the president called him a traitor and wouldn't talk to him on the street. And so this has been around before, where the president wants things that are accommodative for growth. Obviously, the central bank president is supposed to be watching out for, of course, making sure that monetary policy is conservative and keeps us on the best footing. Right. So that back and forth, it's nothing new. The fact that somebody said it out loud doesn't change it.
Yeah. Not everybody was nice back then. We've had a string of decorum for a bit, but yeah, that hasn't been history, right?
No. And there is one more thing on the Fed. It's raising rates. They're at 1.75 to 2% on the short end. And when they raise, it'll be to 2 to 2.25 on the short end. And we got to look at 10 years that are around 2.8. And so that difference between the overnight rate and the 10-year rate is getting very, very small. And even the 30-year Treasury is at 3%. And so the yield curve is getting very flat. A lot of people are saying, hey, that presages a recession. I don't think that's the case. Okay. It has in the past, but it's all about central banks around the world and what they're doing. We're still the high yield offering on the planet, even though we have the best economy. So I'm not scared of the yield curve at this point.
And you wrote about that in the July issue of Boom and Bust, the yield curve? Okay, so
I did. I wrote about it and pointed out, guess what? When central banks print $15 trillion, a lot of money starts looking for a home. And when the Germans still have negative 10-year interest rates and the Japanese are holding theirs at 0, our 10-year at 2.8 looks very attractive.
Yeah, excellent. And if you want to learn more on that, obviously go check out that issue. Yep. Okay, that's what we have for that topic. Let's move on to real estate. We've had news on existing home sales and new home sales. Let's start with existing. They were down 0.7%, down 1.5% for the year. Now that's the lowest monthly number since February 2016. Prices are actually moving down a little bit. You noted that supply is flat. And then on new home angle, we had a dip of 1.7% on expectations of a 1.7% increase. Supply is increasing a bit, although what do you make out of both the existing home market, as you say, is really the bulk of the sales, but what do you make of these reports?
Well, it's something you and I have talked about for a long time. Home sales kind of went flat at the beginning of this year, and we said, hey, we don't know that this is a trend that's going to roll over and die. We're going to wait for it. Right. Expect it to kind of muddle along. And that's exactly where we've been. Prices have held in there, and that's very interesting. Existing home sale prices dipped just a touch, which is good, right? But supply is so narrow there just aren't enough homes out there for people to buy because it's really chunky. There might be 10 for sale in your neighborhood. There might be 0 for sale in another neighborhood.
Yeah.
And so it's very difficult. It's not like shares of stock where anybody can touch any share on a national exchange. And so supply is really what's holding this back, and prices have kind of flattened there. When you look at new home sales, that's somewhat interesting because prices actually continue to go up and you saw supply expand. And so new home sellers, builders are bringing on more supply. And actually one of the builders, Toll Brothers, which builds high-end homes in the 850 plus range, they had great earnings this week when they said, guess what? People are actually adding $100,000 of add-ons to our builds. And so that market's doing well, that upscale in the new market. And that is actually probably pulling up that median new home sale price as well. The trouble is in the entry market and the first-time home buyer. It's just hard to get a home in that price range anymore because the costs of building with the lumber and the other materials and the labor, it just prices them out. And so builders are building a little higher up, and you just can't get enough inventory for people to buy at that range. And that's where most sales tend to happen.
Yeah, absolutely. And one thing I think you've touched on too is the recovery of home builders. That's kind of an interesting story, isn't it? It's not they were devastated in the crash, and then they've sort of built themselves right back up into a nice, profitable space, which maybe not so great for consumers, but good for home builders.
Well, they did. They've held close to the vest. They're not going out and building with abandon like they did before. I don't have any sympathy for home builders because it's one of those things that gets lost in history. They were given a one-time reach back to put losses against profits for the previous, I think, 7-8 years, which no one's ever done. And I thought, wait a second, why do they get a break that we as citizens don't? But they have played it well here in the rebound.
Okay, so maybe that recovery was, they were given a little bit of a leg up there. But
just a little bit of help there from the taxpayer.
All right, thanks, Rodney. The other thing that came out this morning, actually, just a few minutes ago, was the durable goods orders. Those fell 1.7%. They were expected to drop 1%. But as you noticed, there is some sort of a good news, bad news in this report, Rodney?
Yeah, the bad news is so small. The transportation number, which is driven by aircraft orders because the dollar numbers are so big in the billions. And so when you don't have aircraft orders in a month, it goes down to 0. Obviously, when you do have it, it's up, 70 billion or something crazy. And so that kind of pulls around the headline number. If you strip that out, we did have some growth. Once is 1.4% on durable goods orders. Without that, and it's really all about business spending. You had some spending on machinery, some computer equipment, and even vehicle orders. And so there were good numbers underneath that should push GDP up a little bit for the third quarter, and even a revision that'll pull up second quarter a little. But I think housing is going to knock that back a bit. So net on that, those two different things, I think GDP is back to a more muted number than it's been.
Now, I'd love to update everybody on the Atlanta Fed's GDP now. We're getting an update today, but it just hasn't come through. I think we're still at 4.3%. So we'll see how that shapes up. We'll definitely have an update for you next week. Yeah, as you mentioned, business shipments were up 0.9% and core capital goods up 1.4%.
Yep.
So we'll see how that shakes out. Yeah, with a little bit of a dip in real estate. The next thing, we have a couple of smaller topics. The situation in Venezuela we've been covering for at least 3 or 4 weeks now. We talked about the breakdown in the public transportation, which means they don't have any. We talked about how people were using eggs as a currency because you have a steady supply of chickens hatching eggs. And because of the fact that, as the thing you noticed today, President Maduro devalued the bolivar by more than 90%. That's not good for anybody, is it, Rodney?
It's really not. And it was last Saturday, and he kind of surprised the market with this. It's almost meaningless. He introduced what he calls the sovereign bolivar, which replaces the strong bolivar, which is kind of like Orwellian currency because all of it's a lie, right? It's not strong. It's not sovereign. It's really just paper. Right. People don't even carry it around. It's too hard. The new currency, just to give you a sense of scale, the new currency is worth 1.5 cents. That's the new one that's devalued by 90%, so plus 90%. Yeah. And so the old one was worth some very small fraction of a penny. It's not even worth going in the 10,000th of a cent range that it was. And so it's just not worth anything. And remember, this country has one of the largest proven oil reserves in the world. It was the richest country in South America and Latin America. And so the fact that they're on the cusp of a complete economic breakdown is just a travesty and speaks to their management of the country where they tried to provide free for all on the backs of taxpayers and businesses, nationalizing assets and things. And of course, it turned into zero.
Right. And then this is certainly more helped by oil crashing, right?
Oh, yeah. Led by when oil prices dropped dramatically, their oil production wasn't worth as much. It's made worse by the fact that they took loans from the Chinese, and the Chinese are saying, yes, we know you can't pay us in hard currency. Yeah. Give us the oil production you have. And so the Chinese are taking 30% of the oil that they take out of the ground because the Venezuelans owe it to them. But this is going to turn into a very large humanitarian disaster in the weeks to come. It will not take long for this to happen. Also has implications for the energy market. The Venezuelans used to produce around 3 million barrels a day. They're down to about 1.5. It's going to go lower. And they won't get their production back for some time because they just don't have the assets in place because how they've managed it through nationalization and things. And so there is a play in here if you're looking at it. I think the energy market's going to be strong, particularly here in the U.S. where we produce more of it now. Right. But we've got to keep our eye on this humanitarian disaster because it's going to pull in countries in this hemisphere rightfully to try and get these people the help they're going to need.
Yeah, certainly a looming disaster. This is a train wreck. This question is how quickly will it run off the rails, right? You mentioned in the copy that they're experimenting with a cryptocurrency that's tied to oil, which is a novel idea. But look, when you're trading eggs, chances are you're not going to be using the blockchain, right?
Well, in their cryptocurrency, they're calling the petro, and of course, it's tied to their oil production and the price they get on their oil. You look at it, it's 3 derivatives away from being an actual currency, and so everybody says you're just trying to skirt the truth, which is you're printing money to pay government bills, driving your value to zero, and it's as simple as that. And as long as they keep printing money to drive their currency to zero, they're going to get this devaluation and a currency that's worthless.
Yeah, absolutely. And one quick thing before we go, we have a trade war update. We slapped another $16 billion worth of tariffs on goods of China. Trade talks are breaking down, Rodney. This is something that we both talk about a lot, but certainly it will have it's having a kind of a muted impact on the markets today. But if this thing gets worse or if it clears, that could certainly have a big impact, right?
Right. This is turning into, as you and I have talked about, of course, way from the show, it's turning into the what if they gave a war or threw a war and nobody came, right? And so it's going on, but in the United States, we're distracted. Retail is having a pretty good year so far. Certainly the retailers are doing well. We're seeing jobs increase. We're seeing wages start to tick higher. A lot of really good things happening here. And yet we are paying more for things. We're seeing businesses being affected by these tariffs, but they're having a much greater effect in other countries like China, where the market's off more than 25%. Their economy's slowing to the point where the government is pushing more debt onto the state-owned companies, which will not end well. And so in terms of, operating from a position of strength, President Trump is certainly doing that, but we're still seeing an effect on many of our companies. And so it's kind of moved to the background. People aren't talking about it much. And as you said, even when we implemented tariffs on 16 billion more in goods yesterday. But I think when this does resolve, which I don't think it'll take that long, we're going to get a bit of a boost. Yeah. And so I've been on record for a long time saying the third quarter should be a bit difficult, certainly more muted than the previous two. And if we get some of that, negativity in the third quarter, but then get a positive in some of the trade war or spat with Mexico or China, we should get a positive that will actually pull us back up again.
Yeah, great perspective there. Well, that's all we had for this week. Looking ahead to next week, it might be another light week. We've got the U.S. National Home Price Index coming out, as well as different cities, 20 cities. And we get a second estimate of U.S. GDP, which tend to fall under the radar, but will give us a better sense of real strength of the economy because these things get revised either up or down, usually down, right, Rodney?
Yep.
But they'll have an idea. Is there anything other than those two items? I guess trade wars, seeing what's going on. Anything else?
Not really. I think it's going to be me and you around next week and nobody else because it's the beginning of Labor Day weekend. Yeah. And so it tends to be a very quiet 2 weeks, the last week of August, first week of September. So I don't expect much. If something happens, we'll certainly talk about it.
Well, it's a party of Rodney and myself, and you are all invited, whoever wants to stick around. And that's all we had. Just to let you know, if you have any questions, comments, suggestions, send those to TV@economyandmarkets.com. And as always, we will see you next week.